Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So this week is a little interesting for me, and I'm going to get into why that is as we go through. I want to set the stage by going through the current market conditions and just show you what I see going on underneath the surface. And my subscribers get this every week, an update on this kind of thing. So this week I wanted to try and share some of the information that I share with my clients to see if it can help prevent losses for you in your account and help make money when the market's going up. So one of the problems we always have is we either want to be bullish or we want to be bearish, and we need something to kind of help us move back and forth. And I have friends who think the market is going roaring higher forever, and I have other friends that literally think this is one of the most difficult markets ever. And I would actually agree that it's a more difficult market than most people think, not just because the optimism is so high, but the speed of the moves against the grain has been very, very difficult. So even if you were up a lot in the first 2 or 3 months of this year, in 2 weeks, if you had been in an oil trade, you're down 13% in a couple of weeks. So really, really quick moving. And so we're going to cover some of that off. Anyway, the market continues to ebb and flow. We're going to do a deep dive into these indexes and a few other things. And if you're interested, I did a chart madness with StockCharts.com. I'd encourage you to go over to their YouTube page and find that. It was quite fun. Did it with Tom Boley and Grayson Rose and Dave Keller. And we basically took 16 stocks and ranked them down to see which one we think would be the top performer by September. I think you'll find you'll enjoy it. Anyway, if you're interested in my March Madness sale, you can go to gregschnell.com/explore and go in there, and you'll save $363, the membership price, down from $860 to under $500. So anyway, go give that a look if you're interested. There's lots of information over there. So let's jump into the charts. And first of all, as I've been doing recently, I've been covering off the equities, and I want to start with the S&P 500, which is this chart. And what you see is we've just kind of been spending some time here over the last 3 weeks trying to get going. And this week we're closing under the 20-day moving average, which would be the 100-period moving average on the 60-minute chart. We're pretty much right at it. And that's also the center of the Bollinger Bands. So that's one place to look at. So what do we see on the market here? Well, when I see this trend up, that looks very good. What I don't like is this trend down in momentum. It continues to make lower highs and lower lows, and recently touched zero. So normally I would put an X here, and I would just say the next rally could mark the top. Anytime you go below zero, you just want to make sure it's got enough power to get out of here. And so far we haven't got out of here. We're kind of trying to break through this prior high, and I realize the optimism is there. So I don't want to be pessimistic, but I want to say that my chart data continues to get weaker, and so we're going to work through some of those charts. But I want you to notice that this market is making a higher high, and notice how the momentum indicator looks. When we go to the weekly chart, we've actually rolled over and we're on a sell signal on the PPO. We don't get too many of those a year, one or two, and we've got one. So we're sitting here at a very high level, and you know, as long as the market made a new high, everybody wants to say, hey, we're making new highs, we're bullish, and I agree with that. You have to try and be bullish when the market is making new highs. The problem we have is this one is now declining in momentum. The prior one on the daily chart is now about to give us a sell signal again. If this number was negative, this would be a sell signal. So right now the PPO line is still above the signal line by 0.01. And if it managed to cross down, let's say in the next few days, then that we'd have another sell signal. And those sell signals, you know, it doesn't sound like much, but the sell signal in February was a pretty good one to pay attention to. The one in January, not so much, right? But I think the biggest difference here is our percentage levels were up around 1.5%. Now we're only at 0.5%. So the momentum over the last 3 months has really declined significantly. So just remember that this is kind of declining and we've had a bounce off zero. And the market seems to be struggling to try and hold new highs. We kind of held them for a few days. So we have a sell signal on the weekly chart, and we have this declining momentum on the daily on the S&P 500. And looking on the 60-minute chart, you can just see that we're really kind of struggling to get anywhere. Monday was a nice up day. Tuesday was a down day where we gave it all back again. Now, the Nasdaq was more positive on Monday. And what I want to show here is, just kind of wrestling here for 3 weeks. But see, our PPO was way below zero, and we're just stalling around the zero line on the 60-minute chart. That's not great news. But the difference is, in this case, remember how the PPO on the S&P 500 was declining? This was kind of flat. Now it's dropped below zero, and now it's having trouble getting back above. And we're also having trouble getting back above the 50-day moving average. So those are pretty important criteria. And on the weekly chart, obviously, we got our sell signal back in February for the Nasdaq 100, and we continue to make lower lows. Now, our our full stochastic is trying to turn up here. So at least we're at a place where we're trying to turn up. The risk that we've got right now is if we don't finish turning up, that would be a significant problem. On the PPO chart, on the point and figure chart, the one thing I'm looking at is we're very close to this level that was support, call it 12,767. And what we wanted to see is we break out to higher highs. So we've had 3 X's here we tried to get through, and we haven't been able to. We're at the low end of the range. If we made 3 O's, which would be the next thing. So we'd make an O, an O, an O. And the way we'd make that is we'd have to go below this number, 12,767.191. So basically, if we got any part of 12,766, we'd make 3 lows, and that would put us at this level of support. Then in order to make another lower low, we'd be at 12,640. But the point being, once you start to break a big support, so we had a brief stab below, we rallied back up, but couldn't make a higher high. Not very good. And now we've come down. If we're going to break this major level of support that's been trying to hold the market, then all of a sudden we could see this weekend. Now I've got some other data that's pretty important that we're going to try and get to. But don't overestimate just being close to the highs, but the market really starting to weaken underneath, and then all of a sudden it goes thunk, and we say, what happened there? And that can really go on. Back in 2018, all of a sudden it just ended up being a 20% decline, but some stocks obviously down 50 and 60%. So let's go back to CompQ now. The reason I want to talk about CompQ, so the Nasdaq 100 is obviously big tech. The Nasdaq Composite has a lot of small cap, highly volatile stocks. And you can see we haven't gone anywhere for 2 weeks. We made a higher high, we made a lower low, made a lower high. Now what are we doing? But the PPO is rolling over right at zero. And this is a pretty important thing on a 60-minute chart, just if you want to watch that minutely. But more impressive for me, or more of an observation, is this 50-period moving average that we just can't seem to get above. And we've kind of rallied down and pulled back up. And now the PPO looks like it wants to roll over below zero. So I think that's pretty important. But the second component of this is, and I've mentioned this many times, but it's important to me, and other people just blow it off as no big deal. So we'll find out in the end whether or not it was worth paying attention. But we had this 4 billion shares a day trading through August, September, October, starting to rally up. And by January and February, at the heart of the Reddit and the SPAC products coming onto the market, we were hitting 10 billion shares a day. That's 2.5 times what we were trading on average. So that huge melt up ended up culminating with these massive volume spikes. And as you can see, this peak in volume also so far marked the high. So that was pointed out on a very timely basis. I made my note about I have two questions article back on February the 12th. Anyway, you can go back and read that on the Canadian Technician. But the big thing for me is that we've got a couple of big trends breaking. We have the relative strength compared to the S&P 500, which basically has been trending up for almost 18 months, since October of 2019. And we're breaking that, so that's a little bit of a concern. Here on the weekly, you can clearly see the volume shift that we've had. Now, I have other charts that show that for the year 2000, and we had the same sort of dynamic. So it's this sudden surge in volume that really makes me think we're putting in a meaningful top. And again, I talk about valuations and all that kind of thing. If you go back and look at 2 or 3 episodes ago from Market Buzz, I cover off a lot of that. I don't want to get into that as much today. I want to cover off some of the breadth charts and just show that they're starting to change, and that makes it pretty important. We also have this major bottom that we've hit on the Nasdaq Composite, and we're sitting right at kind of the low from here. There's a little bit lower low going back another 200 points below here. And I think if this whole major top area doesn't hold, we could probably make a meaningful leg down. That would be a big concern. So that's a couple of things I'm looking at. Again, if you want to look at the year 2000 comparison, this is the year 2021, but here's the year 2000. And the point I make on this chart was, we're sitting here, so we make our top, we come up, we come down, and as we rally back up and try and break through the prior moving averages, just let me line up this chart. The problem is that we all of a sudden started to race lower, okay? So let's go back to look at the current situation. And what you see is we're stalled at this moving average and trying to break back above it. PPO is below zero. Lots of things are not looking great. So we really need to be aware of just how tender we are, because we have stocks with 60 times revenues and all that kind of expensive stuff sitting out there. So the genuine valuations for the market are quite high. Okay, so let's look at the breadth indicator, because they're not horrible, but they're starting to break down. So what does that mean? So here is the Nasdaq advanced decline line. So again, if a stock goes up on any given day, it's an advance. If it goes down on any given day, it's a decline. And we keep track of that each day. So that's this spiky area at the bottom. We have a 2-week moving average of the data up here. And in the middle here is the actual, what we call cumulative advanced decline line. And that option is set, just let me show you how you set these. So I've got the different views here, the cumulative and the histogram, which is this particular mode here. So by changing the display style, you can change the results you're getting. But my point being, we've broken this uptrend. We broke it in February. We've rallied back down. We haven't made a new high, but we haven't made a new high in the index either. But we keep kind of struggling here at this 13.5, and now all of a sudden this looks like it's rolling over. You can see that this line is a lot weaker than price. We kind of had the same thing going here, and then all of a sudden it just literally kept going, and you can see price actually declined quite meaningfully into the original low, so from 14 to 12.5, whatever that was, a meaningful decline, call it 1,500 points on 14,000, so a little over 10%. On the next chart, what we've got is the net new highs. Now, this is the number of stocks making new 52-week highs on a given day minus the number of stocks making new 52-week lows, and we call that the net difference. In the bottom here, what we've done is show the actual value. So at the end of Tuesday, we're minus 163. That just happens to be the lowest level going back to the COVID dip. I think bigger than that, though, is that this distance from here to here is now getting on to 1 year. And so what happens is you no longer have to be below the COVID low to make a new 52-week low. As an example, you could be up quite a bit more. and start to see that difference. So that's what we're watching for with this particular indicator. So it keeps track of the new 52-week highs and lows, and in the middle is a 2-week moving average of that. So this is on the Nasdaq composite. But what you see is this is probably going to migrate lower now that we have that big spike low getting behind us. So as we move into April, we're probably going to see that this doesn't reach these big extremes anymore, because we'll have some stocks making new 52-week lows, some stocks making new 52-week highs, and it won't be quite as big a gap. Sorry, that was advanced decline line data. No, that was net new highs. I was right, sorry. Okay, so here's the New York advanced decline line data. And what you see is that we're still holding above the trend line, which is very good. And price is also holding above the recent trend. So this looks better than the Nasdaq. And the reason it looks better is because it hasn't broken down yet. What we want to focus on here, so just to show you again, so the Nasdaq's already breaking down quite significantly. And the same thing on the advanced decline. So one of the things that you see at market tops is that you'll see some markets continue on and make new highs, and then some markets don't, some indexes. And we're starting to see that with the Nasdaq continuing to underperform. When we get to the high-low data, which I just explained, again, we still have this big spike we have to get past. So today is the 1-year anniversary of the low, March 23rd. Of last year, and now March 23rd of this year. So what we want to focus on as we go forward, obviously, as we leave this peak behind, you can see in March, we weren't making a lot of new lows nor new highs, but we were kind of even by the end of March. So already things had started to improve on that indicator, but price had a long way to go in order to stop making new lows. So again, here it just had to get above this big dip, and that would stop the new low calculation. And obviously you're a long way from the high, so you can't make new highs. As this chart changes, we're going to watch this get considerably more balanced rather than just all new highs. So we were up at a pretty high level, the highest level in multiple years, so that sounds pretty bullish. In reality, the reason this is so high is because this was so low and such an extreme level to get below. Anyway, the reason I try to explain that out clearly is there's new people who watch, and I want them to understand what we're talking about. The difference between advanced decline, which is just compared to yesterday or the day before, and net new highs and new lows is to a 1 year ago version. So when we look what actually happened today, or on Tuesday, is we see Nasdaq new highs under 100. So not very bullish when you consider looking back here, basically one of the lowest dips we've had in the last 4 or 5 months. And the number of New York new highs were right down near the lows. Obviously, if we don't start to bounce here, that's a bit of a concern. Because this has kind of been the level that we've been holding. Now, what you're seeing on the new lows is all of a sudden we're spiking quite considerably, even though we haven't gone past, like we're just at that 52-week low. So this is really starting to spike up. Now, let's unwind this tape a little bit, a couple of years of data. And what you could see is our spike doesn't look very big, considering back in 2020 we made these lows, and in late 2018 this was a 20% decline in the market. And we had some spikes here. So we continue to watch that data form. My bigger impression of all of that is that if we don't keep making these new highs while the market is up at new highs, that's probably a bigger clue than these new lows. But anyway, these indicators are going to start to balance out now that we have that big COVID spike behind us. Okay, so let's look at the S&P 1500. Again, our advanced decline line is still intact, and so is our uptrend is still intact, either the yellow one or the black one. But the big thing is we kind of ran into a peak here, and you can see most of these peaks reverse quite hard. The exception would be this February peak, basically just went sideways for the rest of the month. But what we don't want to see is this big kind of uptrend start to break, and you can see back here in 2020, that was one of the clues. The advanced decline line started to fall away. In the August-September market correction period in here, we also had this downtrend so we had broken the uptrend and we were basically declining for about 6 weeks. And then on the October low, even though low was down here, notice how this had already started to make higher lows. So the advanced decline was actually changing how many stocks were pushing down while the market was dropping. So that was one of the helpful clues to get the rally started. Anyway, what we're looking for here is we want to make sure this line holds up, and if it starts to break down, that's a more meaningful correction. Again, because the market has been so jerky here, dropping some tech stocks significantly, dropping Amazon and Apple, almost 20%, and yet the market's still trying to hold up, dropping energy, really big in the last few weeks. Quite all of these are meaningful shifts, and of course the market's still going higher, so you're wondering why your portfolio is not, and in the meantime these names are really dropping hard. So anyway, what we saw today was the S&P 500, the mid caps and the small caps, and this chart was originally created by Arthur Hill, but it was so well done I have no need to modify it. And what Arthur had kind of pointed out was when it gets down to these three line levels, that can mark a meaningful trend change. So anyway, we have that warning sitting here now. This was an exhaustion low on 2 out of the 3. Anyway, it was a big bounce point for that. So maybe we're ready to bounce and we can go higher. We still have the advanced decline lines in place, so that looks pretty good. One of the problems I have is I like to look at the Canadian market. And again, I always think of the Canadian market as a smaller market. It's weaker, so it should probably break down first. What we see here is the price is still holding the uptrend, but the advanced decline line dipped below this below the uptrend line before, rallied back up, made a slightly higher high, couldn't hold it, and is now breaking down again. So I'm getting a little worried that the Canadian market is actually getting weak and breaking its advanced decline lines. And when that happens, I would also expect that to start to happen in the bigger market, the S&P 500 or some of the US markets. The Canadian market, this is only to March 19th. Let me just fix that and put save on that. It was just my Friday review. Anyway, so it's still holding up in terms of high-low data, but not very well. Again, we've still got this spike low behind us. So this data is going to become more meaningful as that spike gets away from us for a couple of weeks here. That should help a lot. Okay. Now the McClellan oscillator, this one's really key. What you can see is we haven't spent very much time above zero. So we had the whole rally off the March lows, and then we spent a lot of time above zero, very bullish. And then we spent a little bit of time in this August, September, October timeframe below zero, rallied back up, October low, big push up, and we spent a whole month up here in positive territory. We ended up creating these summation indexes, which is summing the daily total of the McClellan oscillator. And you can see this is getting weaker. And one of my charts, and here's the New York composite line. So this is the New York Stock Exchange McClellan oscillator and the summation index. And this is the New York composite stock index, so different than the S&P 500. Anyway, it's trending higher. What we see here is this continues to make lower highs, and this is starting to fall. Well, on my next chart, what I show is that when this usually goes below 400, we typically see a bigger market correction. So I'm getting a little worried because we're having trouble rallying here, and each time it rolls over, we're making lower highs and lows. So the momentum is clearly coming out of the market while we're hitting these new highs. So that's a bit of a concern. When we go to the Nasdaq, this is getting around the 200 level, and for some reason the 200 level is more important for the Nasdaq. So I like to watch it there, and you can see back here in 2014-15, even though this was stuck under 200, the market kept slightly advancing, which was fine. The big difference here is obviously we've got some big jerky moves down, like the COVID low and the October 2018 low. When it started to break down under this 200 level, we basically just kept falling. And again, this was a 20% decline. So watching for those big sorts of moves is kind of one of the important things, I think. So I'll show you the Schnell Strength Index that I show to my subscribers each week, and I haven't updated it for Tuesday night yet. But one of the things is each rally we've had less participation in, and over here it says add protection on lower lows. Well, we actually made a higher low, so I was hoping we were going to break out here, and now we're stalling again in this downtrend. I like to get bullish when it gets above 75 like it did back in April and May. And it was still rising, very bullish. Well, what happened here is we rallied up and fell, started to fall down again. So this is concerning that we don't have enough momentum here to keep these rallies going. So it's one of the reasons that I'm starting to think things are getting too weak to continue to rally. Okay. I want to just show a couple of charts in here because I think they show some meaningful data. So this was the volume for the Nasdaq, again, 4 billion shares going up to the 10 billion. And you can see this big volume rise, and now all of a sudden we've lost that sort of enthusiasm, and now we seem to be rolling over here. So this is a bit of a concern. And Friday was options expiration, so that was that spike. But in general, less people or less trades participating in the market. When we look at the monthly data, this PPO was at an extreme only seen back in 1999 on the way up here. So if we rolled over here, this would be, by far considered one of the biggest euphoria moments in the last 30 or 40 years. And so just to be aware that we're literally at one of those crazy levels. When you look on the weekly chart, this is the on-balance volume. And you can see the accumulation distribution. The one thing that we're starting to see is this is coming down a bit for the Nasdaq one, or for the composite. When we do the same on the Nasdaq 100, look at this. The on-balance volume is already touching the line, the signal line, 65-week moving average. And when we extend this period back, just roll this out, we don't touch this line very often. So we touched it in October 2018, and we started to go lower, and that was a 20% correction. And then in 2015, that marked a major market top. Took us about a year to get through before we started to make new highs again. So it was pretty weak in that period as well. So this on-balance volume on a weekly chart starting to give us some clues. The accumulation distribution line almost never gets broken. We're getting, closer on that one. So that's another reason to be concerned. So we have all of these things setting up, and they haven't broken yet. But now we're starting to see things like crude oil really snap lower. And it's those types of things that I think are just as big a clue that something bigger is going on. So again, in my newsletter, if you're interested at all, you can go try a 2-week free trial over at gregschnell.com and see if there's anything there that interests you. But one of the things I'm starting to notice is the rest of the world is starting to break down as well after this big year-long rally. So here's the emerging markets ETF, and it's broken. We're rolling over on that one. The Shanghai market, which I'm trying to figure out why it's starting to break down, but it is. Here is the uptrend off the March lows. We've broken down, and we've been making lower highs for 4 weeks now. So not really great. And we've broken my uptrend in momentum, which is one of my favorite indicators telling me that bigger picture damage is being done. Anyway, hopefully that gives you some ideas to be cautious here. I realize there's some people that are so bullish they couldn't see a problem, but I would like to say that a deeper look at conditions suggests at least being aware of the damage sitting in front of us and try not to get hurt by it. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recording on StockCharts TV YouTube page. Take some time, head around my website and see if there's anything over there for you. There's some a tab called Free, and under there's some market articles as well. Thanks. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.